All right. Hello, everyone, and welcome to the panel discussion about venturing into a net zero future. This panel discussion is organized by the European Carbon Offset Tokenization Association. Stick with the acronym, it's ECOTA. We are a think tank focusing on connecting bright minds like our panelists, Alison, Arjan, and Ed and Sandro on the topic of digital environmental assets. We at ECOTA, we are passionate about the intersection of sustainability and blockchain technology. And we want to use this combination to achieve a net zero Europe. That's what we're going to talk about today. Panels like these are made possible by our trusted ECOTA members, institutions like Reuters and Partners. Thank you very much for this. I'm Max. I'm one of the two executive directors of ECOTA, and I'm your moderator of today. And today we want to take a look on the entire industry of regenerative finance and the role of venture capital in this entire space. And to start today's evening off, I have four great panelists here who are experts in the industry, experts in investing into ReFi, and who can talk about ReFi, have made some experience. And maybe you briefly introduce yourself before we start with the actual discussion here. Maybe you can start, Alison.
Sure, thanks, Max. My name is Alison Filler. I am the community lead at Climate Collective. We are an innovation network that is leveraging Web3 tools for climate action at scale. And in particular, we work with investors, scientists, nonprofits, and entrepreneurs to build trust and liquidity for digital environmental assets. So glad to be here.
Perfect. Thanks, Arjan. You can go next.
Thank you, Max, for having me. I'm an investment analyst with VU Venture Partners, where I'm looking at Web3 firms and specifically the ones who are interested in taking forward the goal of sustainability with our partners, and really glad to be here. Looking forward for a fruitful interaction.
Thanks for taking part, Arjan. Ed, you can go next.
Sure. Thanks for having me here. I'm Ed Walters. I'm a managing partner at Allegory, a venture capital firm that we started a year ago to invest in companies at the intersection of Web3 and climate. We've made about 50 investments to date into a lot of the companies we might talk about today, like Toucan and Flow Carbon and Senkin and others. I also chair the Climate Collective, so I get to work with Alison on a pretty regular basis, which is the best part of my job.
I can imagine that. Thank you very much. Salo, last but not least.
Yeah, thanks, Max, for having me. I'm Sandro. I'm general partner from Vanagon Ventures. We are an investment fund, also started about a year ago as a business angel syndicate. We invested in fintech, Web3, and climate, and pretty much that formed also our thesis for a larger fund that we are raising beginning of next year. So happy to be here.
Thanks very much, guys, and thanks for taking part. I'm looking forward to our discussion about ReFi and venture capital, but maybe to kick us off here, people who are not familiar with the term ReFi, regenerative finance, Alison, maybe you can give us a quick introduction into what is really ReFi and what our people that work on ReFi are passionate about. Maybe you can give us a broad overview over the industry.
Sure. So very simply, ReFi or regenerative finance is a movement that aims to reorient economic growth in line with environmental benefit. And so a lot of the folks that work in the space are using money in particular as a tool to solve those misaligned incentives and to address kind of systemic challenges.
That's perfect. Thank you. When I heard so let me walk you through my journey into ReFi. When I first heard of ReFi, I thought, oh, these are your typical like NGOs who gather some funds, some donations, maybe something like Greenpeace parallels. Maybe directing this to you, Sandro. You are working in venture capitals. You are interested in actual business model in ReFi. Maybe you can just walk me through why ReFi is actually something where you can build a sustainable business model and actually drive some revenue rather than just being an NGO with no like real business model attached to that you can invest in.
Sure. Yeah, I mean, when we look at the whole ReFi ecosystem, there are a few building blocks that I think particularly ReFi people and ReFi investors looking at. So if we start at the real world project which are like reforestation projects, moving on to MRVs, like measurement, reporting, verification standards, then going into the bridges, like bringing carbon credits online, and then the more customer-facing units of the marketplaces. There are several opportunities for Web3 to bring more speed, transparency, all the traits that we know from the past Web3 innovations into money and climate. And one of the main areas that everyone's, at least in my bubble, is currently focusing on is on-chain carbon credits and how to implement them into a greater economic system. That said, I think there are areas where we have more Web 2 or Web 2.5 solutions, and somewhere where we have more like really pure Web 3 on-chain tokens for carbon credits. And yeah, I think the value add is comes down to the point in the value chain where you're looking at. But what I learned, I mean, we started as like pure play Web 3. Now we also get pitch decks of, let's say, inventory management of carbon credits, where we also think, okay, that's also a great business. It's just software as a service, and it connects somehow to on-chain, but it's not a pure play Web3 decentralized thingy that we were looking at in the past. So it's like depending on the value chain where you're looking at, and depending on the solution, there are several investment opportunities. And so far, we feel if it solves the cause, we invest up and down the stack. So
I saw Ed, you were nodding a couple of times. Do you have anything to add to this? And maybe especially at the intersection of like how Sandro talked about like carbon credits on chain, anything. So we have carbon credits in our name. So this is very interesting topic, Sandro. Thank you for picking it up. But Ed, maybe you can elaborate a bit more on this.
Yeah, sure. And I think your question of like why not a nonprofit is an interesting one, because to me that gets to the heart of what Web3 is about, which is questioning what the purpose of money is for. And so I think right now in our current like capitalist framework, there's for-profit, non-for-profit. Non-for-profit are all of these public goods that people care about, but that the free market won't support. And to me, that's a market failure. And so one idea behind Web3 is using the technology of money, how we actually value goods and assets, and transporting that onto public goods that we all care about, like pristine forests and clean water. And so the opportunity here is to experiment with new kinds of economic systems that can value things that we care about in our world. And the question then is, okay, that's an interesting idea. Where do you start, right? That's like a very abstract concept. A place to start that feels straightforward is around carbon markets, because carbon credits in some ways have been this new technology that ascribes value to a carbon ton that can be then transferred to other players in the ecosystem and then valued, right? And I think the first application of Web3 applied to carbon markets is, let's create a more fungible carbon credit. Let's find technologies that can make this credit higher quality, more fungible, more transparent. And it turns out blockchain is a really great technology for that, right? You suddenly have a public ledger. You suddenly have currencies that you can add onto these protocols. And you suddenly have the ability to create this mutable record that people can verify to the point of origin, which is often the project, which is often a hard thing to do in the current kind of carbon market regulatory scheme. So to me, as I came into this space, it felt like an opportunity to both question the foundations of our economic system, which is for-profit, non-for-profit, but also to experiment with a technology, carbon credits, that we all agree is kind of broken, but we weren't sure how to fix. And so a lot of things we could talk about today, I think, are that. It's how are we starting with carbon credits, and from there, iterating other kinds of environmental assets that we care about, but that we can't currently fund in the market.
Before mirroring this back to Alison, because I think she has a own perspective on this, because she works with grants. I want to ask you, Arjan, you work for a venture capital firm also interested in this field. I'm interested in your story. Why did you choose like working at this intersection, not going for a classical VC career, for example?
Yeah, that's a very interesting question. So one of the things that we saw was how Web3 is growing and how you can bring a lot of things on chain and increase transparency. So that kind of interested us. And then the second thing we look at is scalability of these projects. So once the projects are on chain, what is the potential of scalability versus the existing projects which are not on chain? So that is something which is very interesting for us.
All right, and bringing this back to you, Alison, you work with grants. So basically, maybe you can just walk us through what your assessment process is of which project are you interested in, which one is worthy of a grant. Maybe you can walk us through your idea of how this space can create value and what is important for you to actually be interested in a project.
Sure. So first on why it's important. I mean, we're talking about venture capital on this panel, so you might be wondering like why grants then? Venture capital is just one financial tool to help a company grow, right? And it really helps them to take off. But in a really nascent space like ReFi, what if there are companies who aren't ready to take off? Maybe they still need help iterating and exploring questions. They may need lower risk funding. So that's really where grants come in. It can be a more patient and flexible form of capital and allows for more learning and experimentation that can be healthy for a new space. So what we're looking for in teams is really, we talked about carbon a little bit already, but there's already so much activity going on in the carbon space. We're looking beyond that now. We are looking for more innovative business models beyond carbon. That could be in blue ecosystems, that could be in tokenomics or other forms of digital environmental assets, really. At the end of the day, we're looking to build trust, data, and liquidity for digital environmental assets. So that means not only growing the size of that asset class, but also improving the quality. So looking at DMRV, how can we improve the tools that we use to measure environmental assets and help broker more trust in the space? And as far as teams, we're looking for, strong teams that have, if possible, entrepreneurial experience, and really a strong grounding in climate science is particularly relevant for this space.
You talked about one very important topic that we at ECOTA talk about with our stakeholders all of the time. And there's one question from the audience. You talked about like building trust in this ecosystem or in this space. And the question actually goes, how much does the integrity of carbon markets matter in your investment decision? And maybe you can start, but I'm also interested in like what Sandro and Ed and Ryan have to say about this, because at least from my point of view, this is one of the biggest points, especially if we talk about institutional adoption, which I can imagine we could talk about this afterwards. But Alison, how high is integrity on your list if you are evaluating the project?
It's important. I think this is a clear gap in the space right now. There's a lot of mistrust and misunderstanding of carbon markets. So to the extent that we can help educate, but also improve the type of data that we're sharing between stakeholders and between partners. And I think it's important to be constantly iterating and raising the bar on that data quality as well. So we can start with a framework of how we're going to evaluate projects, but we can also come back to it every several years and continue to iterate on it as we learn more about how we need to adapt our ecosystems and our services towards them. So I would say integrity is very important, but I think speed matters as well, right? We don't want to let the perfect be the enemy of the good. So we are looking for a balance there.
I see, Sandro, do you want to add anything?
Now, from my point of view, it's always good if we see like the transparency of credit origination. So like also seeing that there are lower quality credits on the market, but then perhaps seeing that public demand goes more for higher quality credits, so you can like work on the supply side there. So for us, we're looking at most of the projects that are super transparent in there when it comes to the origin.
Yeah, I'd agree. I mean, to me, trust is at the core of both carbon markets, but also of like Web3 right now. Like, I mean, like the FTX implosion has, I think, dealt us all a very big setback, even if like the nature of the implosion isn't related to Web3 or crypto at all. I think it does damage trust in blockchain and Web3 technologies being tools that can be applied to carbon markets. That all said, there's a lot of just like very exciting innovation taking place around ways to make carbon credits both higher quality and more transparent. And to me right now, the biggest problem is one of supply. Like there's lots of demand. Like be it voluntary or compliance-driven markets, there will be more and more demand for high-quality carbon credits. The question is, how do you get them, right? Like, how do you finance these upstream projects that deliver really high-quality carbon offsets? And the bottleneck right now seems to be around MRV, right? Measurement, reporting, verification. How do we validate with robust scientific methodologies that the credits we're offsetting are legitimate? And as a result, that's a lot of where I've been spending my time, which is in new digital MRV solutions that can both complement Verra and Gold Standard and others, but also in some cases supplement them, right, or replace them. It's one of those things where there's no need for one or two groups to have, I think, a monopoly on quality. I think we all want quality for a better planet. So that's where I've been focusing.
Yeah, and maybe Arjan, I want to place the question back to you, but let me give you one more perspective on this. I'm interested in, so we talked about the supply problem of the market and especially problem of high quality supply. Do you see that VCs are hesitant to enter the market because of this trust issue? I would be interested in your perspective on this.
First of all, the question was very interesting to me because on the supply side, a lot of people said that the problem is of the issue, the trust and the quality of carbon credits. What Web3 brings in the picture is how you can measure the quality of those carbon credits and track them on chain through and through, which was not the case in previously. Now, what you can do with the Web3 technology is you can see how the carbon credit is there, what kind of quality it has, and in the future, since everything is on chain and in a public ledger, you can in the future go back and check if the quality was good enough as told in the reports, or if there is some kind of slashing that is required. And in the future, the market would punish those kind of carbon credits where the quality is not good or the demand for them would be lower. This said, at this moment, as Ed mentioned, after the FTX collapse, there is definitely, an issue with VC funds where it's difficult to trust when a company comes with tokens or they're trying to tokenize something. Apart from that, what we also see is a lot of companies do not have clear tokenomics. That is where Ellison and Climate Collective and similar projects comes in, which can help these companies develop tokenomics and present it to investors rather than coming with not a very clear roadmap and business model.
You talked about a point that connects to a question we just got from the audience. So you talked about like the added value that blockchain technologies can give to this space. And one of the questions from the audience is, let's assume that we can tokenize carbon credits. Let's just assume this, that we can like validly do this. Like what holding and trading model have a fit for carbon credits? So this, I'm imagining this question is, so why don't we just use the European trading system, the ETS, for example? Why do we need blockchain in this whole process? Maybe you can elaborate a bit more on this.
Definitely. So if you see the existing carbon market, sometimes there are cases where a carbon credit is produced, but several years down the line, the quality of carbon credits is taken into question, or there is no specific history which we can draw upon. What blockchain or Web3 does is you can easily track all that history and also punish the user in the future if they're falsifying information. The second thing that I see is how these carbon credits on blockchain can be used to incentivize companies to actually save on carbon. So you can resell them, you can have a higher price, and these carbon credits can retire and the company can, get more money rather than using those carbon credits and polluting the environment in the first place. And we are at the very initial stages of both Web3 and ReFi. So in the future, we would definitely see more innovation coming in this space.
Alison, maybe let me rephrase this question a bit. So when we talk to like stakeholders out of politics, for example, many of them mention, for example, the energy consumption by Bitcoin, for example, and extrapolate this to every blockchain out there. Do you hear some concerns when you give out grants and you have climate in your name? Do you have some like insights on this?
Not so much anymore since the merge this past September. So that's when Ethereum network moved to a fully proof of stake system, which is much more energy efficient. So I'd say that issue is becoming less relevant over time since September, in our network at least.
All right. And maybe to think this through a bit further, Sandro, when we look at the value chain of a credit, so there is a project, for example, in the forest, but I don't want to give the example. I let you give the example. Maybe you can walk us through the value chain of a carbon credit from the project to my MetaMask wallet, for example, and walk me through what you think is the most interesting part of the value chain for you as a VC.
Mm-hmm. I briefly touched on it at the beginning of our talk. So when I look at the value chain, I also start at the project level. So it can be like direct air capture devices, can be reforestation project, can be algae projects, where you just have like people on the ground or machines. Then you have the MRV or put it a digital MRV space. MRV we often refer to like legacy registries like Vera and Gold Standard. Digital MRVs, we have some innovative projects like Open Forest Protocol, for example, who democratize the measurement, reporting, verification process and incentivize people to provide data in there. There we have as a technology layer also like Earth observation, LiDAR technology, smartphones taking picture instead of using a ruler. So we have several technologies in there that can all ride onto the same coordination layer, which is then the underlying blockchain. But the handover from the, let's say, the physical area to the on-chain area is then the part where we talk about the bridges or the tokenization, where we have players like Toucan or Flow Carbon. And then we have a marketplace where you then have tokenized carbon credits in different forms. Some you have them in a bundled way, as with KlimaDAO, for example. Then you have marketplaces and places like Senken, where you can drill down into a project specific like geographies or sort them by rating. And then you can pay with USDC and receive the carbon credits into your MetaMask wallet, where then you can also decide if you want to retire them or if you want to use them as a collateral for something. We see people building carbon-backed stable coins. We see people building staking rewards that go into reforestation projects. So there's all this magic that can happen when you, instead of a carbon certificate as a PDF, you have a token and you can embed it into financial applications. And I think this is the magic that's sitting there. And you asked me specifically about the investment areas, what we are looking at. Same with Ed. I think digital MRVs super exciting. Also beyond forests. Still the marketplace or the customer facing layer I find interesting, and not only like where does a corporate buy their next tons of or offset their next tons of carbon credit, but where are application where we can embed those that corporates or customers use it and offset carbon without even realizing it. So this is, I think, the magic where that no one has to care about their MetaMask anymore.
And let's bring you into the picture. I said, so Sandro talked about MRV. Is it also your area of interest in your investing journey?
It's interesting. I think we go through kind of waves of innovation as we see the space evolve. And so early on, we saw a lot of people thinking about creating essentially carbon bridges to bridge carbon credits from registries like Vera on chain. Then we saw carbon marketplaces. And I think now all of these entrepreneurs are coming up against the same bottleneck of supply. I think as a result, it's hard to not think about digital MRV as like the next necessary innovation to add to the stack. I think it also, when you think about real utility that kind of Web3 and blockchain unlocks, like digital MRV is a very good use case where, as Sandra talked about, when you have commoditized sensors, geospatial satellite data, LiDAR, drones, et cetera, as well as just people with smartphones, how do you best collect that data, incentivize the collection of that data, and then analyze it? And again, Web3 incentives are a really great mechanism for that. So as a result, right now, it feels like a really straightforward innovation to spend a lot of time on. I think there is a coordination challenge, which is ironic given Web3 that we're all struggling with, which is what are the right standards for us to all agree on using? So, Allison Climate Collective has been doing a lot of work there around agreeing on the right kind of like methodologies and almost like public goods that we should all jointly build across chains, across projects, so that we're talking about the same things. So that's maybe the one part that I've had trouble with, which is, okay, like we all agree that there's some technologies we need to develop around measurement, reporting, and verification. What exactly does quality mean here? And what standards should we all agree on using? There are a lot out there, some nascent, some established, none perfect. And where does that fit into the stack?
Arjan, do you have a white card in your pocket that you are interested in? Something that we haven't talked about yet?
For sure. So Sandro mentioned about stablecoins and how stablecoins are coming, using more sustainable outcomes or carbon credits. So that is something we have been very interested in and have been looking at a lot of companies. Bringing stablecoin using carbon credits and carbon markets is something which is very interesting because it reduces the cost of borrowing for projects which are working towards sustainability, and also it improves their capacity of raising funds, which has potentially been a challenge in the past, and investors not being investing in these companies. However, on the contrary, we have seen collapse of some stablecoins, and that is one thing that has been worrying us as well, where how can these carbon markets or sustainable markets have a certain price range and can maintain their peg or can give the returns that they are looking for. To give you an example, there are some stablecoins which are financing certain projects to reduce carbon or to increase sustainability, but they're based on the future cash flow of a particular project. However, if there is a downfall in the cash flow, or for example, the cost of carbon credit reduces or the price of solar energy reduces, the whole peg becomes destabilized, and that creates a lot of problems. So this is one very interesting thing that we are looking at. But at the same time, we feel there will be a lot of innovations in the coming future, and the cost of borrowing would be reduced significantly because of use of stablecoins and other tools on Web3 for climate projects.
Thanks. And I want to get back to something that Sandro mentioned earlier. So the retiring or the holding in my wallet. And there's actually a question from the audience about this. And let me slightly rephrase this. And I'm hoping that this gets the gist of your question, whoever posted this in the audience. So is with the tokenization of carbon credits, for example, are we talking about a new asset class here that you can mix into your portfolio that provides some kind of exceptional beta or offers something like uncorrelated to usual equities? Where do you see the carbon credits, especially if they're tokenized and you could put them in your wallet in the entirety of a diversified portfolio, something like this? And where can we not only create impact with this for our portfolios, but also for the planet? And maybe we'll start this off with you, Alison.
Yeah, I think there are two purposes to this. You could hold a carbon credit to retire it for its environmental benefit, to either offset your emissions if you're a corporate or even as an individual, or you can use that as a financing tool. You could have future financing or leverage debt capital off of that kind of asset. So yes, it is a new asset class that we are seeing. I think it's going to unlock through new decentralized finance tools a lot of new mechanisms for bringing new projects online and addressing some of those supply issues that Ed was mentioning earlier.
Sandro, do you have anything to add to this since you brought it up?
No, I mean, one interesting thought is like this if people like see carbon credits as a speculative asset, and we assume that prices go up, you immediately also force actors in the industry to work more on carbon avoidance, because eventually it becomes more expensive to offset the way off. So it's kind of a where price can steer also action in companies. That's an interesting thought, and I think BlackRock just recently announced also a large fund focused on carbon, and we see quotes like "the next unicorns will be green." So I think definitely there's room for holding carbon as an asset. I'm not sure yet on the like. It will be. It depends on where it originates from, and how long we will hodl carbon in order to make it as expensive so that people move more into carbon avoidance. That's the question mark.
Yeah, I mean, on that point, like, look, the fun case to make is that like you can make a ton of money here, right? Like, if the price of carbon goes up 10, 100x over the next 15, 20 years, which kind of needs to, if we want to save the planet. If you invest in it now, you'll make a lot of money. There are lots of things that need to go right for that to happen. And there are lots of things that can go wrong with that kind of attitude, right? Like, I think we saw the initial experiment that Klima pioneered around speculating on carbon markets go really well and then go really wrong, right? But through Klima led the way here for a lot of us to get into this space, and I credit them with being very innovative, very aggressive, and very smart. But they were very early, and with being early, you often kind of encounter all the roadblocks other people don't have to, right? And here, there's a lot of speculation into crappy carbon credits, and there are open questions on if that set the movement back or pushed it forward. And I think you could argue in either direction. And so I think we need to be very careful about not unleashing like a wave of greed that ends up doing negative things to markets that we're trying to make more effective, more efficient, more thoughtful, more transparent.
And that lends it perfectly into a question from the audience. And Zano, I see that you unmute yourself. You can go first for this one, which is actually, so we are talking about like the voluntary carbon market. But is it actually the voluntary carbon market that provides the solution for our like environmental problem to get to a net zero market, for Europe, for example, or is it more like on the regulatory side? So do we need regulation in this, or can the voluntary market fix it on its own?
Does the question imply that if we need the same regulation as in the regulated market for the voluntary market, or?
You can choose this one. Since it's not specified, you can choose the best narrative for you. Yeah. Debunk afterwards.
So if I think about regulation, and especially in Germany, and I mean I'm based in Germany, so I think the first thing that we regulated in crypto was like custodianship to raise taxes on crypto and to monitor everything. But this also brought some great innovation and some location benefits for startups in Europe, or at least in Germany. If we think about also the MiCA regulation, a lot of people argue that it's hindering innovation. We say, okay, at least if you start a venture in a certain space, you have some regulatory guidelines. And I think for carbon markets, if they regulate certain standards, let's say, when it comes to trading or issuance of credits, it could be helpful. But I don't know if it's a local regulation that helps, because I mean we are talking about a global issue and we're talking about global projects. Yeah. Let's discuss openly. I'm thinking about it while I'm answering the question, actually. So giving it out to the others. So, sorry.
Alison, what's your perspective on this?
Yeah, well, that's historically been one of the most important roles of the registries, right? Is to serve as a standard setting body. And they've also served to issue credits as well, to verify them. there are different schools of thought here if they should be doing both. But I think someone needs to be setting the standards so that A, we can ensure quality, and B, we can be comparing these products in like terms. That's one of our greatest barriers at this time. And to moving liquidity and trust into the space is saying these are apples to apples comparisons that you can make.
And I think also we talked about the value chain, and there was one question from the audience that I want to pose to Arjan here. So the question goes something like this: how can we incentivize? So in the value chain, the first step is actually there has to be a project in the real world. This is not something that blockchain can solve. There has to be a project in the real world. How can we incentivize these projects to grow? We talked about the supply problem of high quality projects. Is there a use case for tokenization and blockchain in this so that we can have more of the high quality actual products that actually decarbonize our world's iron?
So yeah, there are quite a lot of uses and how you can, increase the demand side. As mentioned by other panelists as well, the demand side is already too much. So the first thing would be to increase the supply, increase the number of tokens so that there is liquidity in the market and people can feel confident about buying these tokens and also the prospect of selling them in the future. The other thing that comes into play when you're using Web3 is the concept of smart contracts and royalties in that, which gives added incentives to company to, not use those carbon credits, make them retire or let someone else buy it and kind of profit from that and also save the environment at the same time, increasing the cost of polluting in the coming future. So that are something that I feel is very interesting to watch it in the coming future. And in terms of increasing, I think the best thing would be for the environment is the demand for these credits don't increase much and companies kind of reduce their own gas emissions and be more sustainable.
Yeah, maybe to add to this, even from our side, from ECOTA, there is a hierarchy in like carbon markets. So the first would be you avoid something, you avoid carbon emissions, then you reduce your carbon emissions, and then there is the offset. So it's not about like doing nothing and just buying offsets for your entire business model. This is not the idea of an offset. It's part of a sustainability strategy. Just to make this clear, that we're not talking about just buy yourself out of your sustainable strategy here. So, but I wanted to come back on something that Alison mentioned, which are the challenges. And you talked about like the heterogeneity of the different carbon credits. You cannot compare them really much because one project is not comparable to the other one. Ed, I'm interested, do you see any other barriers or hurdles to scale this market up? Because we need the voluntary market to scale up 100x, I don't know, maybe you have a figure in mind, but we need to scale it up vastly in the next coming years. Do you have any barriers in mind that we have to overcome?
So yeah, if thinking in terms of barriers, I can divide it into different silos. The first one being the quality of carbon credits or, trying to monitor what kind of credits are we getting and what kind of projects do we have. The second one is definitely the demand and supply model of things. How much is the demand? How much is the supply? Are we able to match it or there is a big mismatch in the market? And then the third one I also see in this particular environment is regulatory. How are regulations helping these carbon credits to be tokenized and be traded in the market? What if you're doing a cross-border trading? How are the settlements going to happen? And then the final thing I see is the network effect. So when we look at liquidity problems and carbon credits as a whole, a major thing is liquidity, having liquidity on an exchange. And since we have multiple exchanges right now, that liquidity kind of becomes a hurdle for any company to scale up in the coming future. So these are the broad areas where I see work can be done in the future.
Ed, do you share this perspective?
Yeah, I mean, I think I'd just add, like, there are some wildly volatile, like, macro conditions right now that I think also lend a lot of just uncertainty to how quickly we're going to see carbon markets scale. Like the war in Ukraine, that is likely going to increase energy prices massively, and if it doesn't stop soon, and unfortunately I don't think it's going to. And so what that does to kind of incentives on corporates to offset their emissions, what that does to carbon markets in terms of pricing, I don't know. To me, it probably will lead to slowdowns in adoption. And then when you look at even just different kind of political environments in the U.S. or other countries as they move toward less climate-friendly regimes, I think a lot of these things can change quite rapidly around enforcement, around compliance, around incentives. And those things really matter right now, right? Like I think like there can be catalytic forces for good and for bad that we currently are seeing sort of bubble all around us. And I don't know actually right now how to like price that in. It feels almost like this moment in time from a trust perspective and from an incentive perspective is just so uncertain. It's hard to know how that affects all the dynamics that Arian mentioned around quality, supply, demand, et cetera.
Another interesting thing I would like to add on here is a lot of people have called on regulations and why regulations are required in the carbon markets and Web3 as well. But if you look at the history of how things have changed politically, when it was the Trump administration in the US, they suddenly decreased the price of carbon emission to $3 to $5 per ton. And when you have the Biden administration, they have increased to over $50 per ton. So regulation always does not mean that things would get better off. Sometimes private players have to come in the market and, kind of set a gold standard or a bar that, okay, ethically, we would not go, let's say, below $40 or $50. So regulation in itself is not an end. It can be a means to an end, and we should definitely consider that.
And this blends into the last topic that I wanted to talk about. So, as you mentioned, adoption, and we talked about like use cases for ourselves. For example, if we want to buy some carbon credits, but I think in the big picture, we have to talk about institutional adoption of the entire space. And I think trust is one big part where I don't want to like set the argument myself. I think, Sandro, what is the feedback you are getting from institutions? What are they looking at? What is important for you in your funding for project, in your investments for institutional adoption?
So what we are doing, when we invest in ventures, we always try to put them in front of a potential customer. And there I'm operating in also a quite a favorable bubble of people. But when I move out of that bubble, I recently got shared an article online from KfW, which is an investment bank in Germany. And they said only half of the companies in Germany have a net zero strategy in place. And only 1 in 10 companies is aiming for climate neutrality in the next 10 years. So 1 in 10. And this brings me then back to reality again, that a lot of corporations are also facing a lot of cost pressure right now due to increased energy prices. And on the other hand, I hope that we have some front runners like big brands who lead the way, where others make it a default to have a sustainable strategy, to have net zero strategy in their corporate mission statement, and also execute on that in a transparent way. But when it comes to adoption, the conversations that I have are very positive with large corporates. I mean, I spent 6 years with Microsoft, and I'm still in touch with a lot of customers in their ESG department, and they have a quite open view also on the intersection of Web3 and carbon. But then you have players where two evil things come together in their eyes. It's oh my God, it's crypto and it's greenwashing. So you have some very differentiated opinions when you talk to corporates and end customers, depending on if you leave the bubble or not. And I made the mission of leaving the bubble more often and talk to people who are probably not that comfortable with and not that pleasing, who give you more no's than yes.
Alison, what is your experience with institutional adoption? What are institutions talking to you about, like ReFi?
I think the biggest point of interest right now is in quality, ensuring the quality of the assets that are coming on chain for investment. Because when you have corporates and institutions who are going to put their brand names behind this area, this asset class, they want to make sure that, like Sandro said, that it's not greenwashing, that it is legitimate. and really that we have a way of ensuring that this is driving real climate impact. So to that end, there is a lot of corporate interest in the DMRV, as Ed was saying, and ensuring that we have the data and the transparency and the auditability to be able to ensure that these projects are delivering on the impacts that they say they are.
One thing I add is
sorry, go ahead.
There was an announcement a few months ago that Temasek, one of the largest sovereign wealth funds in the world, and BlackRock, one of the largest asset managers in the world, launched decarbonization partners. And one of their largest kind of first investments was into Carbon Direct. And you have those upstream players making commitments like this. It sends strong signals downstream to the rest of the market that often relies on these first movers to make kind of big investment decisions around where they allocate resources. So to me, when I look at the world of corporates, a lot of the largest players are actually moving pretty aggressively in the directions we hope they would. It's the long fragmented tail of the market that to me gets left behind here. And that's a much thornier problem to resolve. And that's where, to me, the decentralization of Web3 is most helpful for all these companies that don't have carbon trading desks and experts in-house that can build their own methodologies and standards and have teams that can check quality. So for me, it's almost more like Web3 and climate is a tool best serving 90% of the fragmented market that can't afford all the solutions that the big corporates create, but don't share.
All right, and I know we're over time, but I have one question left, and I'm so interested in it. So I hope you have 1 or 2 minutes left. So So for the finish, I want to get back to something that Alison said in the start. I'm interested in your, if you look a couple of years into the future, we talked a lot about carbon credits right now, but what are some innovations that you see in ReFi coming up in the future, like beyond carbon credits? And we can do one quick round for this and then we'll wrap up. I'm sorry that we're a bit over time, but maybe you go first.
For sure. So there are a couple of things that I see as a trend coming up in the industry. The first one in terms of ReFi or Web3 is reducing the cost of borrowing, can be using stable coins or having things on chain to increase that transparency and reducing the cost for projects to be financed. The second one we definitely see, and it's coming up in Europe and Germany to be very specific, is transparency in the supply chain and how you can see scope 2, scope 3 emissions and how they can be managed over supply chain and can be presented to the government as a strict norm rather than playing around or fudging the data. The third thing that we definitely see is blockchain and ReFi as a service, where a lot of companies are coming up and they're helping existing players in the market to be more adaptable to climate change, to be more ESG compliant, and so on. So I think these are the big trends that I see within the ReFi system that is evolving and helping to control climate change.
Maybe Zando, you can go next.
I would look forward into, as I already mentioned, like these embedded solutions where people don't have to really change their behavior, where like positive externalities or even carbon financing of carbon projects is or are implemented in day-to-day business transactions. I think this is something where I like the approach of thinking in APIs that you can just connect to existing workflows in corporates or also in private lives. So making it like hiding the complexity behind the transactions.
Ed, what's on your mind?
I'm thinking a lot about the future of Web3 right now and kind of where it goes over the last few months, kind of, and what it becomes. And to me, bringing real world collateral on chain is really important, and carbon credits are one straightforward way to do that. But I think there are many other forms of collateral that can act as floors to a lot of the assets that I think we generally are trading or working with in Web3. So I'm looking at ways to tokenize not just things like carbon credits, but also other kinds of real estate that carbon credits are generated from. So when we look at like regenerative farming or blue carbon, there is always underlying asset that has property rights. And I don't think we've developed a great kind of legal, regulatory, or data primitive to make that fungible as kind of an infrastructural area. So I'm looking at a lot of those technologies and kind of products.
Alison, what are you excited about?
A couple quick fronts on the data side. I think it's exciting to see combinations of automated DMRV, so using satellite data, but combining that with kind of a decentralized science or a DeSci approach and citizen science to mobilize communities to be more involved in validating what we're picking up from our IoT tools. On the asset types, I think moving beyond carbon and more into biodiversity. How are we mapping species health, for example? I think that's a really exciting area. And then on the financing side and building liquidity, forward financing and more insurance products and parametric insurance, I think is really exciting to watch.
All right, Alison, Ayan, Ed, Sandro, thank you very much for taking part in this panel. I had a blast. I hope you did too. And thank you in the audience for being part of this today and being part of the mission. Very happy to have you with you. You can follow ECOTA on LinkedIn to get to know when our next panel is. The next panel is coming up in December. We are going to wrap up COP27 in Egypt. So if you're interested in this and interested in upcoming regulations, for example, or upcoming trends in the industry, you should definitely follow us. And thanks so much for the panelists for being with us today. It was great, and see you around. Thank you. Bye-bye.
Thank you.
Thank you.
Thank you, Max.